All right. Today we're going to look at weekly charts of all the indices, but first, do not forget to take advantage of the BANC Labor Day sale where you can get 50% off 1 month of bank trade alerts, or you can now get a 10% discount off the annual plan. And if you're an existing bank member, be sure to take advantage of the annual plan. If you're committed for the full year, now is the best time to take advantage of that savings. All right, so looking at the chart of SPY, remember this is a weekly chart, so every candlestick is one entire week's worth of price action. And we could see we did get a red candlestick this week, so it is possible we are getting a pivot from a lower high. But in order to say this is a lower high pivot, we need confirmation with this week's candle breaking below the candle of last week, and we would like to see this support trend line fail, which is critical support at 442. So going into this week, we are going to have critical support at SPY 442, and the critical resistance will be the high right around 451. So look for a trading range between 442 and 451, and either direction we break that range will tell us where we are likely heading, with the break of support meaning we're likely going towards 430, and the break of resistance meaning we're likely going towards 460 and then 480. Now keep in mind, this is a weekly chart, so this is going to take many months to play out, but I currently have a projection that we would hold above SPY 430 and then reach somewhere around 480 by early next year. And I don't think we have to hit that target this year, even though I wouldn't rule it out completely in a very bullish scenario. So this week, focus on that critical support at 442 and that critical resistance at 451. And the break of that range will tell us which direction we're likely going next. Now keep in mind, this is still a weekly bull trend of higher lows and higher highs, which means you're going to have a much simpler time swing trading off support rather than trying to short at resistance. And I do think largely a lot of the pullback is over with, and if we get an additional pullback, it will simply be a retest of that breakout at 430, and from there I do think we'll bounce and continue higher towards the previous all-time high. Obviously I'm wrong if price action proves me incorrect, but that is going to require the break of that critical support at 430. So if we break 442, look for a trip down towards 430, and then if we break 430, this is going to look like a bear trend of lower highs and lower lows, which means we'll then be looking for more bearish probabilities. But right now this is still a bullish trend, which means we're likely going higher, and you know the critical levels of support and resistance going into the next week ahead. So next, let's take a look at the technical indicators, and we can see that we are still above a rising weekly 20 period moving average, and that critical support is right around 436. And we can see we still have bullish momentum from the RSI above 50. The MACD is still trying to cross over to the negative direction, but still above zero. And remember, a crossover MACD only matters in the bearish context if we break below the rising weekly 20 period moving average. And as you can tell from the price action, we have not. So we will want to pay attention to 436, because if we break that with the negative MACD crossover, that could turn into impulsive selling. So that is definitely going to be a very critical weekly support level. And then the Bollinger Band squeeze, you can see we still have a positive histogram, and at any point we can continue to go higher. So this chart is still largely bullish while SPY is above these critical support levels. Jumping over to a weekly chart of the triple Qs, you can see a very similar story as SPY where we had a red week, and that is going to be telling us if we break that support at 369, we could be coming down towards the rising weekly 20 period moving average right around 360. So for that reason, 369 will be the weekly breakdown, and then below that we're likely going to 360, and 360 is going to be critical support because we do have the MACD crossover. If we lose the critical support, we will likely get impulsive selling, and bearish momentum will likely pick up as we head lower towards 350. Now we still have bullish momentum on the weekly RSI, and we still have bullish momentum on the histogram for the Bollinger Band squeeze. So it is going to depend on the price action to hold above that critical support to maintain this bull trend. On the Dow Jones weekly chart, we can see we had the red week that pulled back down towards the critical weekly support, which I'm calling between 342 and 343, because that is the neckline of this very bullish weekly inverse head and shoulders breakout. You can see we had the breakout, and then we came all the way back down to the neckline to test the breakout as support, and so far we have the bounce of that support, and now we're getting a pullback once more towards that level, which could be the higher low, higher high before we continue to take off towards a price target at 370. The only thing that is going to invalidate the price target at 370 in the Dow Jones is going to be the price action break of this support right around 342. So what that means is we are likely heading to 370 while we are getting weekly closes above 342. And if we get any weekly closes below 342, this is going to look like a lower high, lower low breakdown, which means this was just a false breakout, and we're not actually going to reach the price target at 370, but the only thing that can confirm we are not going to 370 would be the price action break and close below 342. So for that reason, I'm considering critical support in the weekly Dow Jones, that level at 342, and if we break below it, we could come all the way back down towards 330. Now, throwing on the indicators on the weekly chart of the Dow Jones, we can still see the RSI is above 50, which is still bullish momentum. The MACD is trying to cross over to negative momentum, but we are still above zero, which means we need the break below the rising 20-period moving average, which is also going to be that critical support right around 343. So the neckline of the inverse head and shoulders and the rising weekly 20-period moving average are pretty much the same exact critical support, which means all traders are going to notice that level as critical support, meaning if it breaks, we are likely going to see impulsive selling. So you have a very clear risk level, and we are sitting right near the risk level, and we are still in a bull trend, and this is the time you're going to get those very rare low risk high reward setups where you lose a little bit if you're wrong, but you have the potential to make a lot more than your risk if you're correct. So watch that critical support, and more importantly, pay attention to the fact that we have a weekly Bollinger Band squeeze, which is usually what we are going to see in a long period of consolidation before a major move in this market. I think the odds favor the major move being to the upward direction, which favors our price target at 370. So I'm still saying I believe the Dow Jones is going to 370 while it continues to close above 342. Manage your risk at the risk level. That way, if price action confirms we are incorrect, you know exactly where to manage your risk from. On the Russell 2000 IWM ETF, we can see that we did get a bearish week because we are just now starting to close below the weekly 20-period moving average. And this ETF has gone absolutely nowhere, going all the way back to May of 2022. We have largely traded around the same exact price within the 180s. We've gone above and below the 180s, but largely we've gone absolutely nowhere. And this has been going on for over a year now. This is evident by the weekly Bollinger Band squeeze, which we still have, and we are getting very close to breaking down below critical support because on the daily chart, we have that critical support at 183, and on the weekly chart, we have critical support right here, right around 184. So 184 to 183 is going to be very critical, and if we break below it, we're likely going back down to the bottom of the range at 170. You can see the weekly RSI is dancing around 50, so we have that neutral momentum, and we're starting to break down to the bearish direction. So if we get any confirmation from the price action, we could see impulsive selling. The MACD is also starting to cross over, and if we get confirmation of the break of critical support, that will obviously favor the bears. So IWM weekly chart is basically saying bounce or die, because if we don't bounce from this critical support, we are going straight down towards 170, which would likely only take 1 or 2 weeks to get there. So pay attention to that critical support zone and don't get bearish until it breaks, because this could be a trap where it looks bearish and then we get an impulsive bounce from critical support and maintain the bull trend and start rising higher towards that bullish resistance up there at 197. Remember, 197 is the bullish catalyst of the breakout, because if we break 197, we're breaking out of the top of the range, and a lot of this consolidation and energy will get released to the bullish direction. The bears need to break 183 and then 170, and then the bears take over and we'll likely see much lower prices. So jumping back over to the S&P 500, you can see the small caps are definitely flashing a warning signal, but keep in mind the small caps are not the market movers. The majority of the market movers are still looking bullish on these weekly charts until we lose critical support, because it's a bull trend until it's not. Remember, we're looking at a bull trend of higher lows and higher highs all year long, which means buying opportunities are going to be at critical support during the pullbacks, and then you want to take your profits as we return into the bull trend and hit resistance levels. This is one of those disciplined approaches where you can't get overly bearish until the chart allows us to, and that is why a lot of this year bears have been getting squeezed out of their positions, because they continue to assume the market's going to crash, even though the chart is showing a bull trend. So stay objective and manage your risk at these critical support levels that I'm giving you, and understand it's going to be a bull trend until it's not, which means if it's not going to be a bull trend, we need to see the price action proving it by breaking down through critical support. So don't forget to take advantage of the BANC Labor Day sale, where you can get 50% off 1 month or 10% off the annual plan. And if you're an existing BANC member that's committed for the full year, be sure to take advantage of that annual discount. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.